Hello and welcome back to a beautiful Wednesday on Crypt. Oh my god, there's some light news. Everyone's awaiting the FOMC decision, and we'll have to see how this market responds. A lot of people are saying it's going to be a pump and a dump, but who knows? That's the magic. That's the magic of macro. Let's get into it. Bam. In looking at the directionality of current markets, we are seeing this merger, this flirtation, this exchange and osmosis between the traditional financial world and blockchain. What is clear is that the realization that these 24/7 always on markets that offer instant finality, low fees, tons of things that unlock entirely new applications to money or to value or whatever we call it. And one of my favorite DeFi protocols is called Centrifuge. It is not a sexy website. It is basically yield-bearing assets like T-bills or collateralized loan offerings, which is, somebody taking out a loan against a piece of collateral like real estate, very common. And today they debuted the DRWA on Stellar with a 20 million anchor investment in tokenized treasuries. So is this like a game changer? I'm not going to say it is. Stellar is a fork of Ripple and it has been around for a long time, but it hasn't been a big mover. However, they are having their conference right now. And just as we see more people come into this RWA space, especially wrapping them in a token so that they can come on chain, we're just seeing some really interesting use cases like I've discussed with the BlackRock Biddle Fund. Now, these are new funds dubbed DJ Treasury. I don't really know how we pronounce it, but it's a DeFi version of the Yanis Henderson short-term US Treasury strategy. They've also got the DEJ AAA, DeFi AAA collateralized loan obligation strategy. Look, that's exactly what I was talking about. And this is what they do. But what is exciting is that Centrifuge is really just creating this bridge, or maybe I should call it a river, because what it is doing is taking liquidity from the traditional markets, wrapping it in these vehicles, these yield-bearing assets, and saying, hey, look, we now have a revenue stream, a yield stream that we can point at different DeFi protocols. And very much in the same way, Athena is doing this in their partnership with Mega ETH to provide yield to operate the central sequencer on Mega ETH. We are going to start to see these flows of capital that can be adjusted because, again, they're software. They're inside of an operating system. So all you will have to do is say, hey, we have a revenue stream coming in this tokenized RWA, and we want to click, point it at protocol XYZ, depending on where the incentives are best. And of course, this is being bolstered. We have the Saudi Awal Bank with 100 billion plus in assets partnering with Chainlink to drive next-gen on-chain finance in Saudi Arabia. And the long and the short of this is that the Arab countries are trying to leapfrog the West in their adoption of blockchain development and blockchain finance. Now, what's interesting to me here is not only are they capital rich, right? There is just tons and tons of money sitting with the Saudis, sitting with the UAE, et cetera, et cetera. And of course, they're actively redefining the Middle East as we speak, trying to move away from the Islamic fundamentalism of Iran, which we've seen with all of the attacks, with a lot of the war going on, and reshape it towards a more modern, younger Arab region. Anyone that's been to Dubai, for example, a major crypto hotspot, will see that a lot of the movers and the shakers are under 40. They're the young millennials. They're well educated. They're extremely ambitious, and they're trying to reshape the region in a much more modern, financial focused, and glamorous format. So this is all just indicative of blockchain moving towards the norm at an incredible rate. Having that competitive mechanism that we see in capitalism in markets is accelerating blockchain adoption because, again, it's just cheaper and it's more reliable. Now, coming back to the US and all the battles, we are seeing our beloved Senator Elizabeth Warren targeting Trump's crypto and AI czar. Now, let's recall Elizabeth Warren and Gary Gensler teamed up for the anti-crypto army. And if you had to ask me, or even if you didn't, the Gary Gensler, Elizabeth Warren team is single-handedly responsible for the number of votes that propelled Trump forward. It's no hidden fact that the majority of millennial millionaires are crypto holders. And well, the whole point of this broadcast is to talk about how this is the future of value and of finance. And to hobble ourselves is absolutely ridiculous. How much have I talked about stablecoin and the way it is backing the hegemony of the US dollar? Now, Elizabeth Warren obviously sitting on the other side of this whole concept of wealth generation by being a promoter of socialism with Zoran Mamdani in New York City. And she has just not given up the reins of this anti-crypto army. She's out here screaming to the heavens about the grift from the Trump family. But again, let's be real. According to Eric Trump, the primary reason for them to come into crypto was the debanking of Operation Choke Point 2-like things, which were led by Elizabeth Warren. So this woman just continually circles back to eat her own tail. And of course, it's obnoxious and they'll fight this battle, but this comes back to this wild release recently, which is that Gary Gensler, during his term as SEC chair, has actually deleted about a year's worth of text messages that he was required by law to maintain. So the assumption here is that this is a lot of information regarding Operation Choke Point 2, or the active debanking of the cryptocurrency industry. They actually caused a run on smaller banks. This was with Silvergate, this was with Signature, and of course, forcing the closure of banks that did have enough capital to stay open. So they're proving that they will kill your business if they don't like it enough. And it's just absolutely wild to come out and say, hey, look, Gensler went after people for any little infraction that they could find, and push come to shove, they accidentally deleted a year's worth of very necessary and relevant text messages. So this is all kind of ridiculous, but at least people are trying to step up and saying, hey, look, adding a Google Drive link for the Gensler text messages that magically disappeared, right? People want to get to the bottom of this. Now, that being said, everything going on with the Gensler oversight really pushed people away from revenue sharing assets. And to me, this is what blockchain is all about. Autonomous businesses, middlemen that are just code, so they can take all of that revenue that they make, not only scaling it beyond your wildest dreams on a very small team, something I talk about a lot, but taking that revenue and saying, hey, look, these computers, these codes, they just need to pay for the server space that operates them. Everything else can be shared back to the community. That is the promise of the early ICOs and the early tokens in blockchain history. But under Gensler, it was like, hey, any talk about revenue share will put you in securities format. You will get a lawsuit that will sue you to death. Remember, Ripple, Coinbase, they each spent $100 to $200 million defending their initial coin offerings against this SEC. So that's pretty insane. And that comes to show that with the thawing off of the SEC in a post-Gensler world, then we're seeing a lot of engagement and a lot of the same SEC commissioners coming out and saying, good, we can finally make good rules. We can finally make rules that maybe would have prevented the Trump family from grifting billions and billions of dollars. But no, they did not want to engage in any sort of good faith dialogue previously. And that means that we're now unlocking what we are calling the revenue meta, which is awesome. This is hyperliquid. This is pump fun. This is sharing the profits and the revenues of these autonomous vehicles with the token holders. This is the whole point of governance tokens, and taking that away pushed us towards the financial nihilism of meme coins, which led to an entire pump of just baseless meme coins. Now, we're seeing the flip side happen with Wormhole launches a reserve tying protocol revenue to token. And this is what we want to see. In a nutshell, we call this the fee switch, right? The protocol is making a ton of money in fees. We want to flip on that switch and start sharing that fee with the token holders. That's what makes all of this so awesome, is that billions of dollars of value can flow through the code, and it takes all that revenue and it shares it with token holders. Token goes up, everybody wins. This is alignment technology, and this is the financial alignment that we want to see bolster. Now, the revenue meta is pouring a ton of money into things like Hyperliquid, like Pump Fund, that again are using the majority of their revenue to buy back their own token. So this is extremely exciting to see. It's directly in contrast with everything that Elizabeth Warren built, everything going on with Gary Gensler, and this is the format that we do want to see for a healthy, robust ecosystem. Again, the nihilism of meme coins, while exciting, while lolzy, is not a firm foundation for building a revolutionary new technology stack around finance. So with all that being said, we are still shaking off the demons of the past, and I'm sure that will take a long time to go away, but things are moving towards a vision of a more perfect, more fluid format where revenues can be shared. And this might be really important in an AI world where jobs are more difficult to come by. You could literally get yield and revenue based off of these highly scalable software-based companies. All things are very exciting there, and we'll see how the FOMC turns out later. Regardless of what happens, it should be an exciting ride. With that being said, don't lever up, stay safe. Give me a like and a sub. I would so greatly appreciate it, and I will see you tomorrow.